Oh, hello everyone, and welcome to this session. Thank you so much for taking the time to come and join me today. And the topic for today is really a look at what is going on in the markets as we come to the end of April. Obviously, it's earnings season, and just to see on the slower time frames whether we can have a view of what we can expect in May and in the weeks coming up. But before we start, as usual, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, as usual, as always, I'm going to looking at obviously charts and seeing what they can, what VPA, volume price analysis, can tell us about what is going on with the markets at the moment. Because if there's one thing that we can be absolutely certain of, is that it's certainly been an interesting time from a price action perspective, from a sentiment perspective. I think I heard markets described the other day as messy in as much that I don't think anyone really knows what is going on, and things are not going to become very clear until well, certainly until next week, because we have the Fed meeting. I mean, the volatility that we've seen in the last certainly this week and the back end of last week came as a result of comments from Powell saying that at their meeting they're now looking at a 50 basis point rise in interest rates, whereas the markets were kind of thinking, yeah, they've got to raise interest rates, but they were going to raise them, much more slowly. That's just one element that the market is having to deal with. There is obviously the ongoing issues with inflation. There is what is going on in the Ukraine, and to that we must also add what's going on in China, which has kind of taken a bit of a back seat in as much that the Chinese have gone for quite a harsh lockdown with on emerging cases and in key kind of industrial hubs. So although that's not had a direct impact at the moment, it certainly will do on supply chains if things don't get produced. Their economy is going to contract. So there's all this that's going on. And of course, next month being May, we have the mantra of sell in May and go away. That's written about every single year. Well, is this year that is where it is actually going to happen? Again, we won't really know until, as I said, certainly the Fed meeting and moving into the sort of first and second week of May. Now, the other thing I want to say about the Fed is that they have this protocol, and that is in, I think, 2 weeks or 10 days before the actual Fed meeting. There are no more comments. There's a kind of purdah. You won't see any Fed speakers. You won't hear from them. You won't see them. They go into a little huddle until the actual FOMC. And also next week we also have non-farm payroll, because ironically, although we look at charts and we hear, we read screaming headlines that the market is in free fall, we're in a bear market, etc., etc., the employment data is actually very positive. The data that is provided to us to evaluate. So, as I said, very mixed, a lot of mixed signals, a lot of people sort of scratching their heads. We look at charts, you see, up days, down days, low volume, high volume. It's kind of all over the place at the moment. And as I said, part of the reason is because there are all these factors going on in the background, causing even more uncertainty. Now, the chart I've actually put up here is the ETF sector for the tech sector. And the reason I want to have a look at the tech sector is because we are having this week there are ongoing releases. We've already had Microsoft, we've had Facebook come in. You know, these are big companies. And the other reason I want to focus on the tech sector is I want to make you aware that of the almost a disproportionate influence that they have on the markets in terms of the percentage, the weightings that they carry in some of the major indices. So not only, you know, the results and the earnings from the tech companies, and I will tell you what the top tech companies are, although I'm sure most of you will know. So not only do they have that, but they are also particularly sensitive to interest rates. That is at least the tech companies that, you know, are maybe leveraged. A lot of tech companies they have so much cash, you know, they rival the GDP of a medium-sized country. And I'm thinking of Apple, who sits on massive cash reserves. Microsoft, you know, the model that Microsoft operates, it's just a huge cash generating business. So although we say that, you know, tech companies are sensitive to interest rates, you do have to distinguish between the ones that are more mature companies, such as Microsoft and Apple, and to the tech companies that are maybe not quite startups, but as you know, sort of well on their way, but they still have to, you know, borrow money to develop as a business. So that's why I want to focus on tech. But to give you an idea, in case you're not aware of it, of how much influence, as I said, I think it's almost a disproportionate amount of weighting that is given in the indices. And here I'm talking about the S&P 500 in particular. I mean, of course, the Nasdaq is a tech, the Nasdaq 100 is a tech index. But if you, I'm not going to talk about it today, but if you look at the Nasdaq Composite, which is much more broad-based in index, you actually get a very different picture of what is happening in the economy. So, but before that, I just want to highlight this site to you. Now, I have actually highlighted it previously, but for those of you who are coming along for the first time, this may be news to you. It's a site called Slick Charts. And you can go in there and you can it actually just covers ARK as well. This is Kathy Wood's vehicle, and you only have to look at the performance of that ETF at the moment to know that, you know, tech has been selling off really heavily. But it's got the S&P, the Nasdaq, and the Dow Jones. It's got some crypto as well, and although I think this has come on board since the last time I visited. This is the S&P 500. Now, the S&P 500 is such a hugely influential benchmark index, not just for the US, it's used globally. You know, if the S&P is doing well, then the rest of the economy, worldwide economies, are considered to be doing well as well. But when you go in and look at the components of the S&P 500, I've actually done the maths here. There's two metrics you have to be aware of. This is just one metric. This is the individual components. But the other metric to be aware of is within the index, there are obviously all these companies are put into a classification, into an industry, into a sector. And the biggest sector, even in the S&P 500, which is not supposed to be, you know, dedicated to technology, that's the job of the Nasdaq 100, is 28%. 28% of the companies in the S&P 500 are actually technology companies. So you can see the whole, you know, the whole market narrative, everything that happens in the market is all really revolves around what is happening in the technology sector. But it actually gets worse, because when you look at the individual weightings of the companies within the S&P 500, if you add up if we say the top, and I've taken the top 13, and the reason I've taken the top 13 is because, you know, when you get to number 14, which is Exxon, which by the way used to be the biggest company in, you know, in the world not that long ago, it only accounts for less than 1%, almost 1%, 0.98. But if you add up the top 13 that we have here, it comes to 30. If I got it, I think I've got it written down, 31%, of which those 13 stocks I have here, what have I got? I think it's 7 of them are tech companies. Now, some of them you obviously know, there's Apple, there's Microsoft. Now, Amazon is quite interesting because you will read that, you know, yeah, it's considered a tech company. It's got a cloud-based system, part of the company. It's certainly moving into that, you know, it's in e-commerce, if you like. But ironically, it doesn't actually feature in the ETF for technology, but for all intents and purposes, let's consider it part of technology. You've got, these are the 2 Google ones, then you have NVIDIA, obviously you've got Meta, which is Facebook, and in fact, although this is at number 15 here, Visa is also in the tech sector, which, you know, you might scratch your head a bit and think, well, why is Visa there? So this is why, first of all, the S&P 500, it's the benchmark industry, benchmark index for, you know, not just the US, the global economy. And then when you dive into it in a bit more detail, you think, well, hold on a minute, goodness gracious, I really, you know, it is so, it is skewed towards the tech center, which is tech sector, which is why it features so heavily. You know, when the people, fund managers, investors in particular, get, you know, quite twitchy, assuming they know this and they've done this kind of analysis on the S&P 500, you know, the whole financial universe becomes very twitchy when things start to sort of, you know, the foundations of the tech industry start, you know, start to wobble, as it were. As I said, you obviously have the index itself. Now, I have it represented here with the SPY, which is the ETF. I don't have the, my Ninja, I don't have access to the SPX, but the SPY is you know, is as good a proxy for it. And I've also got the futures, which is the E-mini futures, which is the ES. This is the June contract. And if you look at the charts across these two, if you look at these 2 charts, you will find, you know, they are very, very similar candle patterns, support and resistance, etc., etc. So that's what we're going to have going to look at in terms of what is going on with, as I said, the S&P 500 as viewed from the SPY. And this is the daily chart. And what I've done here is what I've tried to portray is not only the price action and volume, as we know, which is part of VPA, but the other elements of VPA, which are hugely important, is obviously candle patterns and time, multiple time frames, but also support and resistance. And what I've tried to introduce into my analysis and also into these sessions that I do for YouTube is how many, you know, the best ways possible we can try and establish those key zones where price is likely to reverse. It's going to hit what I call a confluence of strong support and resistance levels and zones. Now, those of you who come along regularly will know that David and I, we've developed our own indicators to help us with this. We have price-based support and resistance in the form of what we call the accumulation and distribution indicator. This is this hatched line that we see here, and you can see this is thicker than this line, which means that it is a stronger price-based level because it has been tested on more than one occasion. And when price approaches it, what we know is that it will more than likely pause, and then if it is going to go through, it's going to take a little bit more effort, and effort is going to be in the form of volume, which we have. This is just the up down volume that we have below. But what we also have is volume-based support and resistance from the volume point of control. This is the area on the chart. You could almost say it's a kind of fair value area. It's there's no clear bias to either the long side or the short side. You will find price will oscillate around this zone and gradually, build up. And this is this bulge that you see on the histogram to the right of the chart. Now, it's actually quite a wide range, and to give you some kind of context of what is happening on the daily chart, we need to go to the slower time frames, and this is where time comes in, not just the time frame that we're looking at, but multiple time frames and the slower time frames, because the slower time frames help to give context to what we see on the faster time frames. Why are we seeing this really big range? And when we look at the month, certainly the weekly and certainly the monthly charts, there are some clues in there which will help to explain that. What I've also done is I've done some trend lines. That I do talk about trend lines in my book, A Complete Guide to Volume Price Analysis, and how you go about drawing them. I know, in an ideal situation, we do want a sort of at least 3 touches. Well, sometimes that's just not possible. We have it here. This is the support one here. And what we want to see with trend lines is where you have a trend line and perhaps you use other ways of displaying support and resistance, either a moving average, maybe you use a Fibonacci. It's where they intersect, or you have a confluence, and you know that is going to be stronger. So for example, up here we have we had this we now have this trend line, particularly when it's going to be revisited maybe at some at some time in the future. We also had a volume resistance here. This is derived from the volume point of control here. These are these sort of bands, if you like, that you see on the VPOC. Then we have a price-based one, and we have the trend line as well. And this one here, well, we don't know, where is that going off to in the future, as it were. And if we look generally, what the trend lines do is they give you, they channel the price action, and you kind of see, well, is that kind of, is it moving? Is it just going nowhere? Is it just moving sideways? Does it have a bias to the short side, the long side? And this also, certainly if you are an intraday trader or a short-term trader, this will also give you some kind of context to what maybe you can expect on the faster time frames. Now, this channel is also within a range. As I said, it's a very wide range, which for day trading is fantastic, because we've had some big moves in the indices, not just the S&P, the SPY, or the SPX, but in actually the Nasdaq and the Dow as well. And you can see generally by the range of the candles. And here we then start to look at the volume underneath, and I'm not going to do the benchmarking today, but what has also been interesting is certainly, in this last week or so, we've seen some big moves, but not really supported by what I call, the kind of volume that you would expect. There's a lot of talk about a lack of liquidity in a lot of markets, a lot of asset classes. Well, the one thing you can rely on with the S&P, with the SPY, with the ES, is there is a ton of liquidity. So if things are going to get more difficult, and this bear market, which according to the metrics we are supposed to be in, because if prices fall more than 20%, etc., over a period of time, then you are in a bear market. That 20% thing is a bit, as I said, I'll cover it another day. John McLennan has a great article about it, and how this idea that if markets fall 20% from their high and they carry, that's it, that's the first signal, if you like, that it's the floodgates are going to open, and down they go on a slippery slope. But as I said, on another session, I will go into that in a little bit more detail. So that's what it looks like on the day. Now, if we move to the week, as I said, what we want to know, the volume will tell us if it's a genuine move, is it validating the price, and then the support and resistance will give us some targets, some objectives of where this is likely to be going. And if we look at the weekly chart here, well, we can clearly see this is bearish. Why? Because we are below the volume point of control. We are below this strong line here. This is a blue line. This was good support, and it certainly tried to go, keep above that, but down it's been going. The trend line from the daily chart, we've got some really nice, points that it's gone through, and it gives us, a target which is down here. Whereas I just have to move. You can't see this, but it's my go to webinar little thing here which obscures what I want to see. Here we are, 400, and this is what I mean by the confluence. It meets, it intersects a volume support line here as well. And we look at the volume underneath it and we think, oh yeah, okay, that is a lot. I mean, if you look at those, that's millions and millions and millions. But it's, if that is going, certainly when in a waterfall, we want to see prices falling dramatically, and we want to see the volume rising dramatically if this is going to turn into a complete meltdown. And just a little bit of history, and someone actually reminded me of this, and that is a lot of people in the market today, apart from yours truly and David, don't have any recent entrants and don't remember the days, or have never seen what I call a true bear market, in the sense that we had after the great financial crash, where I think the S&P went down, is it over 500 days, before it actually turned around, when it actually stopped at the quite spooky 666, and that was the first sign that there was a reversal. It was a massive hammer candle, and David and I looked at the chart and said, yeah, this is now over. We've had dramatic drops. We've had tantrums in the market from market participants on the threat of, QE being withdrawn, etc. But, we've also seen some very dramatic V-shaped reversals, as we have seen here as well. This is back in, where is this one? March. Yeah, the 2020, the pandemic, that was clearly terrible, and then suddenly off it. And this is this massive trend higher that we've had since then. But moving to the monthly chart, which is really, really interesting. And what I've done is I've pulled it right back to, as we see here, 2010. And look at the difference. While it's been going higher, look at the range of the candles, very, very narrow, but marching higher. This is a very, very typical bull market. Then we've had all these various events coming in and upsetting the market for various reasons, but it's always reversed, it's always come back. And this is where this notion of buying the dip has been coming in. This is the volume point of control, and the bull market has actually continued higher. But look at the volume underneath it. It's really nothing to write home about. So you can see it has carried on higher. People ask me all the time, do markets go up on low volume? Yeah, for sure they do, particularly coming into what we call the Santa Claus rally. This is December, this is January, February, March. Now, the interesting thing, as you can see here, let me just expand this a little bit. The most interesting aspect of these three candles is, notice the wicks at the bottom of the candle. So each month dramatic fall, push higher with buyers coming in. February, exactly the same, push back higher. March, exactly the same. But we haven't seen it so far in April. Are we going to get it tomorrow? Well, we are going to have a ton of volume coming in tomorrow if we're going to see the same reaction, because obviously it's the last day of the trading month. But look at the volume underneath it. You have a massive, massive down candle. And, you know, I don't know. Is it ready? Is it actually ready to go into a full-blown bear market? Now, as I said, we're really going to have to be a little bit patient. The technical signs on the chart are they're ambiguous at the very best. And looking at our trend lines, where have we got potential pause points? Well, we've got 400. The worry here is this this narrowing of the volume point of control. This is a low volume node, and what happens is when price does approach one of these zones, then you know it's likely to move very, very quickly, and down it will go, and the levels are laid out. These monthly levels are going to be on here for some time. And where could it go all the way back to? Well, I suppose it could go all the way back down to the volume point of control. The factors that are going to come into play, as I said, are next week's Fed meeting. We have got the NFT, non-farm payroll, NFP next week as well. We also have to be aware of what is going on in, the geopolitical side. We have got this thing with China, but really the other thing is just watch what is going on in the tech sector. And I've actually got the sector that needs to be watched, the ETF. This is the ETF for it rather than individual stocks. So if I just move here, this is the XLK, which is the tech sector, and I've done exactly the thing. You can see here it's kind of in this messy, what I call a messy channel, in the sense that it is it's got a downward feel to it. And once again, we had this big fall. This was not yesterday, this was the day before. I can't remember which company came in, didn't come in as expected, but it stopped dead on a key support. You've got a trend line, you've got a big trend line here. We've also got volume support here. This is at 140. And this was yesterday's candle. Now, if this was right at the bottom, I would say you could say that's a gravestone doji because it's got a ton of volume underneath it, and you would say that could possibly be a positive sign and maybe a reversal high. We will certainly know once the market opens later today. And as I said, we have got one more day. Who is reporting? I think we've got, I think we have Apple coming today, and we can see by those numbers that I showed you on slick charts, the percentages that Apple, the weighting of the S&P, but also Apple and Microsoft together, I have to go and double check, but I'm pretty certain is together, they actually account for 40% of this ETF. So you can see just how important just two companies are, not only to the ETF, but to the market itself. Now, is that a healthy thing? I personally don't think so. That's just my opinion, and who am I? But setting that aside, once you know that, and it's particularly if you trade the indices and the ETFs, and you take you're not only on specific stocks, as it were, it will give you it will give more context to what is happening in the market. So that's the daily chart. We do exactly the same thing with the weekly chart. And we've got some more levels here. It's what we have is we are actually below the volume point of control on the weekly, and we are on the daily. Let me just double check that as well. Yeah, we are on the daily as well. Yeah, we're by some distance. We're at the outer limit. This band here, because it hasn't got a little bit of a histogram at the top, it might put one on, but when there's clear, there's nothing there, it does act as a strong support, or if it was at the top, strong resistance. So that's encouraging. That's what we can say. Now, this is the weekly. Again, we are below the volume point of control, but again, okay, it's not fantastic going up, but you have to look at the range of the candle and look at the volume underneath it. And sometimes it's not quite an anomaly, but it's still going up. Yep, fine. What you want are the real, when something really stands out. You either got a very, very compressed candle with a ton of volume, or you get a massive candle with very, very little volume. You really want to look more at the kind of extreme versions of anomalies. And again, where are we? Well, we've got a volume support here. It actually comes in off this trend line here, and if that goes down, well, we've got some pretty good support down here in terms of price, and this kind of projecting out of where this trend line is. So that's the weekly. And if we look at the monthly, we have, here we are, let's have a look. Yeah, we have a kind of a sort of mirror of what we saw on the S&P 500, on the SPY, which is the S&P 500. So you have an almost identical candle configuration, which kind of confirms what I said, that tech is, you have to understand what is going on in tech. Tech is everything. At this particular, it has been, because of low interest rates, there's been money to spray around and to invest, and it's not just individual investors that have gone into companies such as Apple. The Swiss National Bank, I think, is the biggest sovereign holder of Apple shares. Whether it's, I think they invest directly, as it were. So you can see why the tech sector, the performance of individual companies is so important. So look at the price action in the context of the chart structure. Put some lines on the chart, either through proprietary indicators or just do the lines yourself. Certainly with trend lines, I haven't come across a piece of software that will do them for you, and there is no sort of strict formula. You have to look at the highs and sometimes the lows, and with wicks as well, you have to be a little bit flexible sometimes. And I've noticed this, I don't know whether you can see it on the daily, sometimes they, when they start off at another point, let me just shrink this down. I haven't quite taken it to the bottom. I've just above the wick, but when they kind of bisect charts, sometimes you'll find they'll come to where the close is. So as I said, it is a little bit of an art. It's a bit like technical analysis and volume price analysis. There's a little bit of an art to it. But once you begin to look at the structure of the chart, it really will help you to as I said, to put the price action into context, and then the volume will then help you to validate what is going on or not going on. Sometimes it's what's not happening on the chart which is more important than what is actually happening on the chart. And what you're looking for are these confluences, are these these intersections of the indicators that you might use to measure, to display, to to highlight those areas on the chart that are hugely important. And as I said, VPA, price action, volume, candles, candle patterns, time, multiple time frames, but also support and resistance. So that's what I wanted to say. Gone on a little bit longer than I intended, so thank you for bearing with me, but I really wanted to pull all this together for you. Sometimes we do a lot of chart analysis, and I do it particularly on my blog. What I've started to do is I actually annotate a lot of the charts. I did earlier. This is actually on the energy sector, because energy again, on a macro level, when there is inflation coming in, or either inflation coming in, inflation is here, you will find commodities, you will find energy will do very, very well. So I looked at the XLE, which is the ETF for the energy sector. And again, I did exactly the same exercise, and we can see here, this is the daily chart, is actually much more in a clear cut channel, as it were, whereas with the tech sector, on the it was much more, there was much more, I wouldn't say volatile, there was much more chop, if you like, on the daily chart. It was still within a channel, but there was much more sort of, a roller coaster ride, which, as I said, it's great for day trading, but the energy sector was a little bit more clear cut, and also you could, the buying at the strong support level was more clear cut. Again, the weekly chart, you had this, you had this very high, very, very nice channel higher, and then there's the monthly chart as well. So as I said, I try and annotate the charts as much as possible, highlighting the VPA lessons, signals, and you can catch that on my blog, which is at annacooling.com. And finally, the proprietary indicators that are on the charts here, the Ninja Trader charts, are from quantumtrading.com. This is a company that my husband David and I started to develop our indicators, and we are developing even more volume. Certainly the new ones that are coming along are very much all orientated towards volume. We're also putting together a very, very comprehensive program for stock trading and investing. It really, I believe, covers pretty much everything that traders and investors need to understand, need to know, to succeed in this market. I've touched on, looking at understanding sectors, understanding the weightings of the indices, understanding even how the sectors are weighted, and with sectors within sectors there are industries. It's been a very, very interesting exercise. May sound a little bit overwhelming, but once you go through it, and once we present it in the way that we do present it, it just makes everything so much clearer, and it's all underpinned, as I said, the truth of the price action is revealed in volume price analysis. So thank you so much for coming and spending some time with me on this video. I hope you've enjoyed what I've covered. Do subscribe, hit the subscribe button, and so you'll get notifications when there are other videos coming, being released. If you've got any questions, just email. You can email me, anna@annacooling.com, or you can just add a comment at the bottom of this video. As I said, slightly longer than I anticipated, but as I said, we are at an interesting but a crucial time in the market, given the price action that we have had thus far, the events that are the risk events that are coming up in the next week or so. And don't forget that mantra: sell in May and go away. And you never know, it might be the year when who knows. But as always, it's what the charts are saying, the price action and the volume. So enjoy the rest of the day, enjoy the rest of the trading week, and let's see what happens tomorrow, and take care.